What's going on, everyone? Sebastian here with Crypto News, bringing you the best crypto content on a daily basis. Today, we're going to be going over the 7 indicators that every DeFi investor should know to be a profitable investor in cryptocurrency. Look, we all know this is still the wild, wild west of cryptocurrency investing. There are just so many different loopholes, potholes, and just potential scams out there that really make it difficult for potential traders to profit when looking to trade or even invest long-term in cryptocurrency. And if you want to be a great investor in DeFi, you do need to have some fundamental analysis procedures in place in order to make proper decisions when the time comes. But having some fundamental knowing of how to invest and where to invest will point you in the right directions and help you find home run winners more often. Or you can always just take the potential hodl approach and just hold on for dear life forever until your thesis potentially pans out or not. Either way, you'll still need to have some fundamental analysis skills in order to be profitable long-term in cryptocurrency. I've been in cryptocurrency for quite a while. Well, not quite a while. 3 years, I would say. As you all know, that's like 10 years of experience being a DeFi investor. I've had a lot of ups, I've had a lot of downs, but luckily I have had a lot of ups and I utilize these strategies that I'm about to go over. Actually, my successes in cryptocurrency are what prompted me to actually create this YouTube channel for you guys, because I have had success in cryptocurrency consistently over these past 3 years, and now I want to be able to provide as much value as I can to the rest of the world so that way other people can learn from my mistakes and also gain from my experience in cryptocurrency investing and now be better investors for it. I'm not a financial advisor, so please do your own research. And if this is your first time watching one of my YouTube videos, then drop me a comment below and leave any comment at all. And guess what? You'll now have a chance to win a free Ledger Nano hardware wallet. So if you've ever wanted a Ledger hardware wallet, just drop a comment below and now you'll have a chance to win a Ledger hardware wallet. The comment could be literally about anything regarding the video, or you can introduce yourself. Just make sure that you leave that comment, and don't forget to subscribe to this channel if you want to get the best crypto content delivered to your phone every single day. DeFi indicators are rarely talked about when it comes to investing in the DeFi space. However, since there are tons of options to choose from, the complexity of the investment process is increasing. This is because some projects in the DeFi space are not legitimate and do not offer any long-term value. Therefore, investing in them would be disastrous for your investment strategy. One of the first steps to take as an investor would be to separate the good investments from the bad ones. With more projects coming into the market, finding projects that suit investors' goals would be an uphill task. But with the proper research and knowing factors to look at, investors can come out on top before throwing their hard-earned money into any crypto project that's recently been. So I'll be pointing out the various important indicators that every DeFi investor should check before throwing their hard-earned money into any project. Now, before we really get into it, let's just do a short intro to explain what this hot trend is. So what is decentralized finance? DeFi aims to connect the finance world to blockchain technology. As you know, the centralized finance space was somewhat rigged and filled with intermediaries that reduce the smoothness of transactions. Decentralized finance is the exact opposite, and since it runs on blockchains, it is permissionless. This means that there are no rigged regulations that govern the space. Although many developers have used this freedom to create life-changing innovations, some malicious persons see DeFi as a tool to rip off unsuspecting individuals. Users in the DeFi space can trade, borrow, loan, and mint assets depending on their choice. A good example of a DeFi platform is the Standard, a project that bridges the gap between precious metals and crypto. It is worth noting that most DeFi projects in existence are driven by the Ethereum blockchain. Although the network fees are high, developers still see it as a launchpad upon which to build their projects. Now I'm going to show you how to utilize the right indicators. As mentioned earlier, new projects are announced on a weekly basis, making it difficult for DeFi investors to keep up with everything. Reviewing projects could be time consuming, and this could result in an investor missing out on the best investment opportunities. It is a complex task to undertake, but there are some indicators you may leverage to your advantage. The first is total value locked, or TVL. Total value locked is the total amount of funds locked into a DeFi protocol. You could think of TVL as all of the liquidity in the liquidity pools of a given money marketplace. For example, in Aave's case, TVL means the amount of funds deposited by liquidity providers to the protocol. TVL can be a useful data point that gives you an idea about the overall interest in DeFi. TVL can also be effective in comparing the market share of different DeFi protocols. This can be especially useful for investors who are looking for undervalued DeFi projects. It is also worth noting that TVL can be measured by using different denominations. For example, the TVL locked in Ethereum projects is typically measured in ETH or USD. Another strategy involves monitoring token supply on cryptocurrency exchanges. When sellers want to sell their tokens, they usually do so on centralized exchanges. However, there is an increasing number of options available to users on decentralized exchanges that do not require trusting an intermediary. Centralized venues tend to have much stronger liquidity. Therefore, it is important to pay attention to the token supply on centralized exchanges. Next, you'll want to look at the token balance trends and movement. The token supply doesn't always indicate a large number of withdrawals from wallets. You also have to look at the balance movements of the token on the exchange. Keep in mind that it's characteristic of crypto trading to move tokens from personal wallets to exchange accounts and vice versa. Only a highly uncharacteristic or significant movement should tip you off when making decisions about DeFi tokens. Next, you'll want to look at the number of unique addresses. It is often straightforward to see how many addresses hold a specific token or asset. If that token or asset exists in Ethereum, for example, you can look up the token's contract address. Block explorers like Etherscan will show you how many holders exist for the token at any given time. Having more unique addresses is always beneficial, but not a foolproof metric either. Statistics confirming the number of unique addresses can be manipulated. It doesn't cost any money to create dozens of new Ethereum addresses and send a handful of tokens. Doing so makes it seem as if the distribution is more diversified, but it keeps the funds in a few people's hands. Unique addresses count as a viable metric for DeFi investors, but only when using it with more precise data. Next, you'll want to pay attention to the inflation rate. There is a popular opinion that a token with a small supply is inflation proof, but this isn't exactly true. A vital metric to keep an eye on is the inflation rate. A small supply now doesn't guarantee a small supply forever, particularly if new tokens are continuously minted. A notable property of Bitcoin is its constantly diminishing inflation rate, which should theoretically prevent the debasement of existing units in the future. That's not to say that every system should aspire to replicate Bitcoin's scarcity. Inflation in and of itself is not necessarily bad, but too much could reduce your slice of the pie. There's no standardized percentage considered good or bad, so it's wise to take the number into account when considering other metrics. There's also speculative purposes. Anyone who pays close attention to the decentralized finance sector will know that the majority of these assets only serve a speculative purpose. No one can determine if DeFi will be around in a few months or even a few years from today. Moreover, a lot of the business models existing today are not necessarily viable in the long term. One factor to keep in mind is how high returns are often signs of short-term Ponzi schemes waiting to collapse. Any platform offering unreasonable returns per hour is usually best avoided. These rates will collapse, or the developers may try to scam users shortly. High rates are never sustainable in the financial industry, decentralized or otherwise. Secondly, DeFi investors have to figure out if the token offers something to the market. If it doesn't, then you are looking at a speculative asset with a limited price potential. If we take the standard as an example, there are multiple multiple use cases for its token. It provides governance rights, but also lets users cover ecosystem fees at a discount. Gouging the use cases of DeFi tokens is often challenging. New assets are only usable in select scenarios, but may experience broader adoption later on. Waiting for this to happen is a risk, yet it can prove worthwhile for some assets. Allocating a minor portion of your portfolio to such speculative investments is advisable if the entire scheme falls apart. Next, there's the price to sales ratio. This indicator is often used in traditional businesses to find out if the stock is undervalued or overvalued. A similar approach can be used for DeFi protocols. To calculate it, divide the protocol's market capitalization by its revenue. Normally, the lower the ratio, the more undervalued the protocol is. The answer is not certain, but it can give you a general idea of how fairly the market values a project. Being a good DeFi investor nowadays is not such an easy task as it used to be. Competition keeps heating up, yet new projects struggle to gain any significant traction more often than not. Without fundamental research and analysis, it is impossible to make any good investment decisions in this industry. That said, following the procedures outlined in this video can help you yield some success. There is no guaranteed way to make money in this industry other than taking a few calculated risks and hoping everything works out. Always stick to thorough analysis, diversification, and apply proper risk management. Well, there you have it, 7 DeFi indicators to help you make better investment decisions when you're looking to invest in cryptocurrency. As a DeFi investor, you really want to utilize as many resources as possible, so that way you know that every decision you're making in cryptocurrency is as informed as possible, giving you more peace of mind investing in the long term. Without the said indicators, I can see it being really rough for you being a newbie investor, or even an investor in general, if you don't have some sort of a sail to navigate the really volatile waters in the cryptocurrency space. And if you've been investing in cryptocurrency for a while, you'll know exactly what I'm talking about. It can be a roller coaster ride at times. However, it still does present a brilliant opportunity for people who know how to do the right things when it comes to investing. So if you found this video resourceful, please smash that like button, like hit your screen, smash it, because I really love this type of videos to really empower you to make better decisions as a DeFi investor. And it also does help support this channel. And if there are any indicators that I did not go over in this video, then drop them in the comments below. I would really appreciate your feedback on what you think more indicators are to potentially navigate these murky waters in cryptocurrency and help investors just make overall better decisions. So please share your expertise or your knowledge in the comments below. I would really appreciate that. Well, thank you so much for watching. I'll see you all on tomorrow's video.